Welcome to the Real Money Show, the number 18778 Silver, the website, guildhallwealth.com. We are the experts in physical precious metals, but we're not your advisors. Seek the advice of those you trust, of course. But when it comes to physical precious metals, we've been in the business a very long time. I learned myself, I've not been in the business for 15 years. It's more like 18 years because my niece turned 18 and I was working here before that. So been in the market a long time. My name is Jeremy Wiseman. I'm joined by Jerry Correia. And when it comes to physical precious metals, give us a shout. We'll show you how to get involved in the market. It's always about physical owning gold and silver. As those who have been listening to the show have seen, the metals have done extraordinarily well this year. It was something we've been waiting for quite some time, but it's just getting started. Why are we saying it's just getting started? Why is it not over for the precious metals market? Well, let's look at the debt market, for instance. Jerry, what's going on with debts this week?
Yeah, at Guildhall and through the Real Money Show, we discussed the four fundamentals, which are inflation, currency devaluation, geopolitical issues, and supply and demand. So we do have to include data when it comes to real world data, Jeremy, when it comes to debts, because the debts don't matter until they do. And it looks like it's going to start mattering. It's going to matter this year for sure. This is coming from the U.S. Bureau of Economic Analysis, some U.S. debt problems. You can't make this stuff up, it says Game of Trades. The U.S. government interest expenses crossed $1 trillion. And at this rate, it is expected to hit $1.7 trillion by April of next year, Jeremy. The U.S. debt crisis is now becoming a major concern. It's always been a major concern for us, but it's, as you can see with this chart, it's slowly starting to progress, from the 70s on, and the debt and the interest expense just skyrockets from 2020 and beyond. And it's just continuing to rise. And what's even worse regarding this debt issue, this debt major concern, is the debt has to mature. This is a source from Convera and Macrobond. A record of $9.3 trillion of U.S. debt will mature within a year. And this is a chart showing the distribution of interest-bearing U.S. debt and amount maturing. This is $9.31 trillion that has to roll over at higher interest rates. For those who are arguing higher for longer, we saw a pullback this week in precious metals. This is definitely the time to take advantage of buying the dip, because the debts are going to matter. And when this rollover happens, the central banks will have to make a move. This could be that black swan, that when that black swan appears, they have to cut interest rates.
Well, it's definitely going to cause trouble, right? You don't know where the trouble can come from when those debts roll over. We know that in the U.S., they're paying more to service their debt than they are to their military.
Yeah.
That's huge. And it's only going to get worse because they've raised interest rates. And that's just, hey, listen, that's what it is. The interest rates are higher. All of this debt is going to roll over. There's going to be some pain somewhere. Are they going to be able to control it is going to be the question. And what kind of contagion could happen as a result of it?
I mean, we're feeling the issue with, the Canadians are feeling the issue with real estate mortgages. How many people have had their mortgages renewed at higher rates? It's a smaller scale, but the magnitude of it is decimating Canadian families.
Now, it's not just debt in the U.S. You're talking about debt in terms of families or mortgages in Canada, but it's also the Bank of Canada itself. This is massive. The Bank of Canada is taking on losses.
Now, last week we talked about the Bank of Canada. They were saying that the economy in Canada, the bank looks stretched. Like this is a big exercise here. We're stretched. How long can we stretch for? Well, this week the Bank of Canada posted a net loss of $934 million in the first quarter of 2024. More losses and zero gold. This is pure comedy coming from the Gold Telegraph. Another great post from, if you're not following the Gold Telegraph, this is a great follow if you want to keep a pulse on the precious metals market and a pulse on what's going on in the real world economy. Bank of Canada has no gold reserves. This is a foundation. If you look at Extra's pyramid, gold is the foundation of the global financial assets. And without gold, there's going to be major risks and major problems for the Bank of Canada. And this is just the first quarter alone. How do we end this, Jeremy? And it's just going to get worse.
I think the way you end it is the way other central banks are ending it, which is they do print money out of thin air, and then they're acquiring physical gold, in which once it gets revalued, you can pay your debts back with a lower number. Now, if you're new to the show, that might sound absolutely ludicrous, except that the Dutch central bank has a column on their books for exactly that, revaluing gold, in which you can then pay off the debts. It's a lot easier to pay it off when you've paid a very low amount for gold and all of a sudden it gets revalued massively higher. And of course, there's people out there, Bill Holter thinks it's going well beyond 27,000, which is where Jim Rickards thinks it's going. And if you're not familiar with Jim Rickards, he's a best-selling author. He's written 5-6 amazing books on precious metals. One is The New Case for Gold, where he just obliterates all the myths on gold, which is amazing. There's a lot of analysts out there who just look at what it would take to put gold backing at certain ratios and where that would then push the price of gold if need be. So there's no doubt gold is incredibly undervalued, silver even more so. If you're looking to acquire some physical precious metals for your portfolio, give us a shout. The number 18778-SILVER. The website, guildhallwealth.com. You can buy it direct, which is a great way to go if you're new to the market. Pick up a tube of silver maples, pick up a couple 10-ounce bars of silver, and maybe an ounce or two of gold. This is a great way to get started. And the reason why we always recommend that is because you're buying an asset. It's not an investment. And so when you're buying an asset, you want to start to understand what it means to have a cost of doing business. This product has to be sourced, refined, created into a bar, packaged, shipped to a wholesaler. It's got to be therefore wholesaled and then shipped using logistics, get it on a train, a plane, and ship it to a retailer, and then you're buying it from a retailer. Now, that might sound like a lot, but in fact, bullion is the most economical way to acquire actual physical gold. Now, you could go even cheaper, which is you could go with non-LBMA approved product. That's London Bullion Market Association. However, if you do, you might get the product at an even better price, but when it comes to liquidating it later on, you've limited the amount of people you can sell to. And so you want to maximize what you can when you're looking to sell. It's the most liquid market in the world. But if you're coming back to Guildhall with product that is not LBMA approved, it's going to cost a lot more to sell it. We've got to bring it back. We've got to get it to a wholesaler because we don't sell this type of product.
Correct.
So it could be cheap to buy, but more expensive to sell. And these are the things that we help clients through at Guildhall.
Yeah, exactly. And because we see gold and silver as first and foremost an insurance policy against financial madness. And if you're going to, sort of compromise on your insurance, you're going to be lowering your costs if you don't want this policy or that policy. If you want a full policy, you're not going to compromise because of price. You're going to go with the service, delivery, and quality because you do not want, especially in gold and silver, how important they are, especially in the geopolitical stage, and we're going to get into that a little later. You do not want to compromise. You're going to go buy the physical, and you're going to ensure that you have serialized. If you're storing it, you're going to have serialized and access and ability to audit, and this is what Guildhall brings to the table. If we did not offer this, you would just have to pick it up and take it home.
Yeah, there's a lot of different options for quote-unquote investing in the market. And all of them, when you look at them closely and inspect them, you realize you don't own anything. You've invested in something, and investing means there's a counterparty that whoever it is, the custodian, the business, when you invest in a stock, there's counterparty risk. Are they going to make a good widget? Do they have good management? Are they going to sell a lot of widgets? All of those things. That's a counterparty. There's no guarantees on that. And when you invest in things like, let's say, a pool account of physical gold, you're sharing that with with other people. That's not your product. Mm-hmm. You don't get to just take delivery of that. That stays in the pool.
Yeah, it's definitely costing you much more. You're outlaying a lot of trust. You're trusting that. Again, if you're looking to save a
Maybe
penny,
a little of this.
exactly. But in a society, in a day and age where trust is out the door, it's all about transparency, because to us, Guildhall, transparency builds trust.
And that's exactly what we do. So with Guildhall, you can buy the product direct, you can store it in the vault, fully allocated, meaning you have, and fully segregated. So the serial bars are listed. The product is separate from all other holdings at the vault in your own sub account. And you can do that within an RSP, a TFSA, a LIRA, LIF, RIF, first time home buyers account, where it's your product. No one can touch it. It's held in a vault outside the banking system, but still within your registered account for your retirement. An asset, an actual asset that you own, can hold in your hand, go and personally audit it in your registered account. In the next segment, let's talk about what's going on with India, because in our business, you have the option to take delivery. And it looks like India is doing the exact same thing. So they're cashing in on that option. The number 18778-SILVER, the website guildhallwealth.com. This is The Real Money Show on 640 Toronto. We'll be right back. Welcome back to The Real Money Show. The number 18778-SILVER and the website guildhallwealth.com. Just before the break, we were talking about what it means to have physical precious metals in a portfolio. And it's not just the peace of mind that comes with actually knowing that you own the physical product, but it's also the peace of mind of knowing that you're no longer in the fiat currency. When you have investments, again, investments, not assets, you're always invested in a currency. You're always within the Canadian dollar, the US dollar. You're using that currency and you're staying within that currency. Whereas physical gold and silver are universal. It is the de facto gold-backed currency. If you don't like the currency, you own gold. And there is no doubt, I don't think there would be any doubt in anybody's mind, Jerry, that the currencies around the world are in trouble, except for maybe Zimbabwe, who we'll talk about. So ironically,
Yes.
is the only one not in trouble. Maybe Russia, their currency is doing pretty well, I understand. But most of the currencies are not doing so well. So how would that affect how does that work with gold? Why is it that gold's doing well, those currencies aren't? And how does that play out in Canada?
Mm-hmm. Well, yeah, all central banks are on the same mission, is to devalue their currencies. If you look at the goldprice.org chart of how gold and silver performed versus all major fiat currencies, it's maintaining and it's actually appreciating. So it's a problem with the currencies. And once we understand that, and back to Canada with the Bank of Canada losses, and just today or yesterday, the GDP and the economy comes in softer than expected in Q1. Per capita down 0.7% quarter over quarter, and diverging even further down from the U.S. trend. So Canada's not doing very well, and they're now tabling that the Bank of Canada could potentially cut rates before the U.S. does it. Europe is saying the same thing, and other countries are saying this. They're all diverging. They're all going in the same direction. It's a currency war, like Jim Rickards writes about, and which would be detrimental to the loonie. If we think about the rate we're right now, what we're paying, a 136 rate on average, this could, with a central bank cut, if we cut, the loonie's going to be in the 140 zone. That's more inflation. That's more cost of living increases for us Canadians.
And and you have to realize it's not just when you go on vacation, it's all of the things that get imported all of a sudden have that added amount. And we're already feeling that. It's incredible that we're at 136. How did that happen? Well,
I know.
It's crazy. And how do you hedge against that? Well, having physical metal can do that. I'll give you an example. I'll give you a perfect example of how gold did that. Brexit.
Oh, yeah.
When Brexit hit, this was 2016, the British pound lost 35% of its purchasing power against a basket of currencies. Bang, out the door, 35%. Everything was all of a sudden that much more expensive in British pounds. But guess what? Gold went up 35% that year. So if you were holding gold as part of your portfolio, you hedged against that loss of purchasing power of the British pound. Mm-hmm. This is why you hold physical gold, because it's negatively correlated to the dollar. This is why central banks are buying gold as well. I mean, you mentioned that they're in a race to the bottom and printing currencies. It's not always their fault. The government as well,
True.
Central banks that claim independence, but the governments are deficit spending like crazy. So that there's a bit of reaction going on with that as well. It's obviously a little more complex. Nonetheless, central banks are buying gold, and now central banks are even, I remember Germany wanted to repatriate their gold. It was a big thing back in, I think, 2014. Now we're seeing another massive repatriation. Can you tell us about that, Jerry?
Absolutely. So the Reserve Bank of India wants to hold their own gold and others will follow. The Bank of India is bringing home 100 tons of gold back to India for safekeeping from the Bank of India. And this is definitely a move in line with a major coordination along with China right now. And it does look that way. And not only other central banks are making the move of repatriating gold and adding gold to their reserves, not just India, but Singapore this week adding 4 tons to 241 tons. You have Jordan adding gold. Also, the Reserve Bank of India, as we mentioned, and even the Central Bank of Iraq also. And this is a move. This is a major coordinated move that is happening at a very important time. And this is not chump change. They still have more gold to repatriate, but a major move, Jeremy, of 100 tons. They were willing to do this because they see what's happening. Imagine moving 100 tons of gold, and they're doing it.
Yeah, listen, it is 3,215,000 ounces of gold.
Wow.
It's 3.2 million ounces of gold. When you put it into a figure based in US dollars, it's $7.5 billion worth of gold. Now, why take delivery? Why take delivery of a relic that doesn't pay a dividend?
Yeah.
Of a pet rock? Why do it? Because we offer physical delivery in the market. So before the show, we were talking about what it would look like to take delivery, because we have clients take delivery, whether it's a TFSA. We have a lot of clients who have RIFs and lifts. And so when they get their payment at the end of the year or at the beginning of the year, a lot of times they'll take their payment in the form of the physical product. They
Amazing.
take it in kind. And it has to be coordinated. There's costs. You have to contact the vault. You have to have it released. You have to have the client sign off on that. They have to then sign off on the cost of doing business, which, if you're taking delivery of a couple ounces of gold, it's not a lot, right? Most people taking delivery, few 100-ounce bars, few 1-ounce bars. It's piddly in terms of the cost of doing it.
Scratch off the serial number.
Scratch it off. Now, let's say though I had some clients that wanted to take delivery of product across the country. Okay, well, FedEx won't insure more than $70,000 worth of goods. So if you want to ship a few $100,000 worth of goods, you can't do that in one shot. We had millions of dollars transferred from one vault to another. They'll only transfer, I think it was 10 million at a time.
Yeah.
So it takes forever.
Oh, yeah.
When you think about trying to ship 3.2 million, $7 billion worth, right?
And we were pretty anxious for us.
You're talking military ships, right?
Yeah.
You're talking military ships in a dockyard taking on physical product. The insurance has got to be crazy. I mean, it's not commercial we're talking here.
Right.
But just to start to think about the logistics and what that would weigh and what that's worth and getting it across the world, it is a commitment. It is a major commitment.
And to the Reserve Bank of India, it's definitely worth the cost to do this major move to them, to repatriate it, to bring it home within their borders. They're not
just had some
they're really
in my mind.
really worried about something, Jeremy.
Home.
Bring it home. And it's coming in time where this is a coordinated effort, where just a couple weeks China told its citizens to buy silver, and that's what we're seeing as well. This is a huge move out of the London vaults and New York vaults moving eastbound. The silver is being drained. Some are reporting that there is no more gold in the LME. We'll see, but this is a coordinated effort, all at a time where people are revealing. Alex Jones came out with a great video this week, along with Gold Ventures. If you follow Gold Ventures, it was a comment that if the silver squeeze looks like the silver squeeze is coordinated by China right now, it can determine the death of the London pricing power and the COMEX.
Well, I'm glad you just brought that up, because besides the fact that I just want to digress a moment here about India, remember they are BRICS member. And so you have to be watching these moves in that sense of coordination of what's coming up, that they're saying we want this physical gold in our possession. As far as what you were just talking about with the product leaving the West, you know, there was a great video out this week. We'll try to get it into our newsletter with Greg Hemke, and he was talking about when gold broke $2,000 back in December, that it looked like the powers that be, the bankers who were short gold, took about 3 months to get their book in order, and then gold took off $300. He said that looks like the exact same thing is happening in the silver market, right?
Little pullback.
Where they raised margin requirements, try to get that price down to 30. Don't let it just take off, because they got to get their books right, and then you might see a move. These are his words, not mine, but then you can get a move up to 36, 37, which is sort of the next level, right? Yeah. We got into $36, Jerry. We're the 20s are behind us.
Yeah.
Right? So that's a huge thing. But he also talked about the arbitrage, which we've talked about on the show, but I thought it was very interesting, and I'm not sure if he talked about this or if I was just thinking about it afterwards, which is when you see this arbitrage where in China they're willing to charge a lot more for the product than in the West, entities will move the product from west to east and sell it at the higher rate. That's an arbitrage. But however, once that product goes to Shanghai Exchange, and if it leaves the exchange, it can't leave China. So it can't go back. It's a one-way street.
Correct.
So what do? How do you stop the arbitrage? How do you stop product going from west to east? Do you raise the price? Because if you raise the price to $36,
what happened to your naked shorts?
Is China willing to buy it at 39?
It goes higher. Yep, that's the game we're playing.
So he talked about them being reactionary, the West being reactionary. But the question becomes, what happens? Is China forcing a mechanism of value, of finding value, right, in the market? We'll have to wait and see, but there's definitely all of a sudden a pressure being applied to this physical market.
I see it that way. It's definitely a preemptive strike. You know, you start the move. The West is definitely reactionary, and this is why the Alex Jones video that came out this week really went into the HSBC and Bank of America, how these rising every dollar that rises in the silver market is costing them billions of dollars in losses. And we're talking about JP Morgan here, HSBC, Bank of America, all losing money. We actually saw a JP Morgan bank explode it's definitely explode in Ohio, in the streets of Ohio. People went missing, people are dead. Is this like a precursor to what's to come with the COMEX? But it was a horrible scene and scenario that happened. But what's going on? It's they're losing the control of this manipulative market, because by using naked shorts, it's a very pricey thing. These shorts, Jeremy, very expensive shorts, and these shorts are getting burnt. And
it's very expensive to make it look like the king's got clothes.
That's right. Like we say before, and other people are chiming in. So the silver market is the Achilles heel for the corrupt financial system, and it's all coming down the pike.
And, wait till you hear what we're talking about in the next segment with the BRICS, what's coming, and also articles being written where it seems like the mainstream is sort of capitulating to the precious metals moves up, but with a but. The number 18778 silver, the website guildhallwealth.com. Remember, at Guildhall, if you can't hold it, you don't own it. That means you can go to the vault and personally audit your holdings. You can take delivery anytime. If it's a registered account, not in a locked-in account, but in an RSP, if you're willing to pay the withholding tax, that's a possibility too. The fact is that it is physical. It's outside the banking system, the financial system. It is your asset. And this asset has gone up 500% in Canadian dollars in the last 20 years. It's up over 400% against the Canadian dollar for silver. And there's so much more to come. We're going to show you how these moves are going to happen and why. The number, again, 18778 silver. The website, guildhallwealth.com. More to come on The Real Money Show on 640 Toronto. Welcome back to The Real Money Show, the number 18778 silver, and the website, guildhallwealth.com. If you're driving in the car and you're thinking, hey, maybe I want to pick up a tube of silver maples, you can go onto our e-store at guildhallpreciousmetals.com and book an order. Pay by e-transfer. You can pick up and pay by cash or debit at pickup. And we do ship by Canada Post. We provide a tracking number. You can use a Flex account. So if you want a little more added layer of security, we can have it shipped directly to your local post office. And then you go and show your photo ID to pick it up. So there's lots of ways to get involved in the market. And we do always recommend just getting involved, put a toe in the water, see what this looks like, and then you can kind of quickly go through the paces if you want to do a lot more. And we are seeing more people getting involved in the market. It's been very consistent this year in terms of people getting into the market. The reasons seem to always be the same, that they're worried about what's happening. There's a lack of confidence, a lack of trust in the system, that they're worried about inflation, etc. But I had a question this week, Jerry, from a client that I thought I'd put towards you. What happens to gold during deflation? I know a lot we're talking about stagflation, and we should talk about who's suggesting that we're in the midst of it. But what happens to gold during deflation?
Well, we're definitely seeing that. Where it was a constant question and was a debate with all the gold pundits in the community over the last few years, and we're actually seeing a bit of that today. After years, this is coming from Gold Telegraph. I'm going to just, digress on this point. So after years of inflation, Zimbabwe is now experiencing deflation with the introduction of its gold-backed currency. It's hilarious. They say the ZiG, which is their gold-backed currency in Zimbabwe, has gained 2% against the US dollar since it was launched. And he concludes by saying gold is like a magic remedy for a broken economy. And yes, Zimbabwe was their currency was the laughing stock of all of the currencies. We had that $1 trillion bill.
It was the currency that was used as the morality tale of what happens when you create too much money.
That's right. So this, in conversations, you think about this is a good thing where we're seeing the prices of everything starting to drop. This deflationary zone. What this is, it's bringing stability to the currency, yes, but it's also deflating the bubbles that were caused by loose and ultra loose monetary and MMT money policies. So if we look soberly at everything around us, everything has gone up. Everything is bubble territory. So the tale is to look at things rationally and find those assets that are undervalued, because those are the assets that are not in bubble territory.
I'm going to add a little flavor to that, which is during a deflation, it's those who lose the least win. And if something is overvalued, the value of that's going to pop really quick, and it's going to burst, and it's going to come back down. And so you want things that are undervalued, and that's where, again, things that are finite aren't affected by it as much as those that are, that you can create out of thin air, like currencies, overvaluations. And this is why even a natural fancy colored diamond would do very well during a deflation, because they're so rare, the natural fancy colored diamonds.
Right.
We've seen some really good things at auctions, by the way, with the colored diamonds. They continue to move higher, which is great. So they are a solid asset as well. Whereas I saw that synthetics are not doing so well. They're being discounted.
Yeah, that's right.
Which is okay. They tried to take advantage, and now it's like, well, people are realizing, and this is a case of deflation, where you say, oh, so your cost on this was several $100s, and you're charging me tens of thousands. Maybe I can get away with a lot less, right? And so the consumer is also tighter.
Yeah.
And all of a sudden, the prices on these are going down dramatically.
Well, truth is being uncovered, right? Yeah. This is bringing honesty back to a corrupt system. And the corruption is also, this is spreading. This is a coordinated effort we're seeing. Years ago when, if we had a country that, had their currency losing value, hyperinflating, they would adopt the US dollar. But Zimbabwe did not have to do that. They're emboldened now. They have backup with the BRICS, and they're doing this for their own people, for their own currencies, by using a simple solution of gold-backed currency. And we're seeing this happen. This was posted today by Jan Nieuwenhuis out of Amsterdam. He writes, the flag bearer of Ghana's new patriotic party, the NPP, Dr. Mamadou Bawumia, has promised to stabilize the local currency by backing it with gold if he's elected president. What a platform, Jeremy. If I had to run for president, that would be my platform, and I think I would get the votes. What are your thoughts on that?
Well, I mean, we know that from last week, the IMF approved, and, we're seeing more and more approval in the markets for precious metals in general. In fact, over the last few months, we've been presenting some articles from mainstream financial news on the physical precious metals. And I wanted to return to that this week because Nick showed us an article this week that came out in BNN where they're citing TD analysts in the market. And tell us about that, Jerry, because we're going to have a talk about this sort of, it's a great market. But
TD, booming silver demand may lead to extreme price action, says TD strategist. So he's citing demand that's heading into the market from industrial demand. So silver taking the headlines for TD. You got to, they have to jump on board. They have to, jump on the train, the bandwagon. But as we read the article from TD, he also says that the squeeze in silver will be temporary as tech companies that rely on silver will switch to other cheaper and readily available metals over time. I'm like what?
Yeah, we gotta unpack that. Let's repeat it. What did he say?
He says the squeeze in silver or the price hike in silver will be temporary as tech companies that rely on silver, that need the silver, like solar, like military, will switch to other cheaper metals. Because and you won't have that price action.
Okay, so
be careful.
Okay, so silver is the most highest electrical conductivity, thermal conductivity, and reflectivity of any metal. Of the four precious metals that are trading in quadruple digits, it is trading in double digits. So there is not a cheaper precious metal than silver. Silver replaced copper in most of things. And if you want things to be more efficient, let's say like your solar panels, you need more silver, not less. Right? You need more of it because that's what's going to make it that much more efficient. So now here's the thing. You could say, but technology progresses and we end up using less of it. Okay, you use less of it, but now you're going to make more of those things. So it doesn't work that way, right?
Right.
Imagine if they started putting silver into windshields. Imagine what that would do all of a sudden, because they would be a great thing. Everyone at home should go get some silver and put a cube of ice on it and see how quick it melts.
Right.
So yeah, that is not a great analyst thing to say. It just kind of demonstrates that he doesn't know his metals very well.
That's very true. Not a very good strategist. Buy with a but. This is something that is a trend that we've been noticing, this demonizing trend of the silver market, and it continues. I mean, a few months ago, I reported from Bloomberg the case for investing in silver in brackets carefully because there is more above ground silver than you know it. Potentially in your grandma's hutch. There's some silverware in there you can melt down if the silver market needed. Sure. Okay, that's a great option. And then even back in 2016, this same analyst from Reuters wrote, silver jumps 50%, but beware the devil's metal, Jeremy. Beware the devil's metal. And they cited the same thing. We're going to switch to cheaper metals back then. In 2016, we could have switched. Why haven't we switched yet?
I don't know. I love that every so often they come up with articles where they say things like, we've figured out how to create gold. Right?
Figure it out.
Alchemy has never changed. Look, there's no substitutes for the real thing, and that is actual physical precious metals. And it's great that the financial markets are getting involved, that they have to capitulate to the market moving higher. But the fact is you really should be listening to the experts about the physical market. And we love pushback articles. We love when clients bring articles to us and they say, what do you think of this? And we're happy to give our opinions on these things. Because look, you and I, Jerry, we listen to podcasts on the way to work. We read articles every day. We've been doing this for
over 10 years.
Yeah, 15 plus years each. We know a little bit about the market. So if you have some questions, we're happy to talk about the market. You can tell we clearly like talking about the market. So feel free to give us a call. The number 1-877-8-SILVER, the website guildhallwealth.com. Coming up next, we've got to talk about where the prices are going. Is the rally over? More to come on The Real Money Show on 640 Toronto. Welcome back to The Real Money Show. The number 1-877-8-SILVER, the website guildhallwealth.com. If you want to own physical precious metals in your portfolio, whether it's direct or as part of a registered account, you give us a call. We'll show you exactly how to do that. We love helping our clients hand in hand through the whole process. We are very service oriented here at Guildhall. And we do work with Questrade. We have our own team at Questrade who assists us with all our clients. So you are never left to your own devices to do things. You always have us to assist you with everything. So if you're new to the markets, we're happy to help you with that as well. It's all about owning physical precious metals in your registered account, as well as taking some physical product home. Now, Jerry, people have watched the market rise. Even our clients are calling us saying, I'm thinking about putting more, but should I be selling? Where are we at in the commodity cycle? Where are we at in the gold bull cycle, silver bull cycle? Are we there yet?
Why silver will go higher? This is definitely the segment that you need to be listening to. We took a lot of calls this week. Should I be selling? When do I sell? If you have to sell, you can. It's very liquid. So, we're not going to force you, but I talked a lot of people out of it to understand these cycles, because gold prices have set 4 straight monthly gains. That was yesterday. The gold price again broke through the all-time high. So there's very little resistance ahead, especially when we have so much demand. We have BRIC meetings coming up in next June. They're going to be meeting about shaping the global financial architecture. So between June 25th and 26th, keep an eye out for that. But another important development that happened this week, Octavio Costa out of Crescat Capital brought up the silver to gold ratio. And that's what we have to look at. When you are seeing that silver is up 30% already plus this year, naturally, and if you're in a stock, you take profit, right? You need to understand this ratio, because what it does, it tempers you, it calms you down, and it gives you a sober look at what silver has done over centuries. The silver to gold ratio today is 73-1. It's very close to 80. Close to that is still a buy for us. And then when we drop down to the average of where we have been, we've seen 30-1 ratio, some maybe say 40, but below 50, we can have that conversation to roll out of silver and into gold.
But how would you play that against, let's say, Mike Maloney, Bix Weir, where they talk about the pendulum swinging the other way, where the ratio goes past 1-1, where they say 16-1 is the historic norm, not the average for the last 100 years, which is closer to 50. But if you say, okay, why couldn't it go the other way in a major bull market? So maybe it's not cash out at 50-1. Maybe it's start to roll over at 50-1, which to me makes sense. That's what I will personally be doing.
It's definitely a discussion at 50-1 is my point. That's let's have that call. Let's set some alerts, which we can do here at Guildhall. We'll give you an alert. But Octavio Costa's comment, he's like, this is an important development. That silver to gold to silver ratio just broke down from a long 13-year upward trend, meaning silver is really undervalued to gold. Silver has been outperforming gold not only on positive days, but on particularly negative ones. If you think a major gold rush won't lead to a silver rush, you probably haven't studied history. And that's what we do here at Guildhall.
Okay, so let's talk about the gold history then.
So this is the one that kind of, turned someone. He didn't have to sell. So he's like, I've been holding for almost 10 years. I'm like, great. Let's go into the silver cycles, because we've had two previous gold and silver cycles from 1970 to 1980. We rallied. That was the first. And we had 4 reasons for that. So 10-year cycle. The second cycle was
How much did it go up for that time?
The second cycle was from 2000 to 2010 with another 3 reasons. That's another 10 years. The combined average of both was 1,400%. The third cycle is where we're at right now. It began in 2016 when gold hit $1,050 low in 2016. Again, this is a 10-year cycle. That would put the next cycle ending or peaking around 2026. And the 2 previous cycles had about 3 or 4 reasons for the bull cycle. We have about 17 reasons today. And then, so if we add 1,400% on top of the low of 1050, that puts gold at around 15,000 an ounce. And if we go back to a 30 to 1 ratio, that puts silver at about $500 an ounce. And remember, back in the end of the first cycle of 1980, it took 2,000 ounces to buy a home. Well, what's the average price of a home today? About $1 million, $1.5 million. 2,000 ounces, $500 an ounce, you have $1 million US. You can go out and buy your house without a mortgage.
At 1.37 exchange, you're pretty much there. So definitely, Jerry, that's amazing. And if anyone wants to know the 17 reasons, give us a call, the number 18778-SILVER, the website guildhallwealth.com. We'll show you the 17 reasons, and we'll show you that chart as well. Maybe we can get that into our newsletter this week. So sign up to the newsletter, give us a call, and we'll show you how all of this is fleshing out. Jerry, any last thoughts on the precious metal market this week?
This is just heating up, Jeremy. More gaslighting, coming from the governments on inflation numbers. Larry Summers just wrote, he was the U.S. Treasury Secretary. So you want to check that out, the National Bureau of Economic Research. We're kind of nerds in that, but this is what we do. We bring you the data so you can make better decisions. The gaslighting will continue. Remember, the Bank of Canada says that the rate is 2.9% inflation. That's a gaslighting number, Jeremy, especially when if you go to the Government of Canada website, old age security pension is reviewed January, April, July, and October to reflect increases in the cost of living as measured by the Consumer Price Index. They're not paying the elderly enough. This is a moral issue for me, and if you want to protect your financial freedom, the way to do it is through precious metals, physical precious metals held entirely outside of the banking system.
And if you missed a show, catch us on YouTube, catch us on Rumble, follow us on X, follow us on Telegram. We're out there showing everyone throughout the week what's been happening in the markets, and it's a great place to start if you're new as well. If you just want to get a flavor of what's going on in the physical gold and silver market, follow us on X and check out some of the articles that we're putting out. Thank you so much to everyone who's joined us this week, and we can't wait to speak to you next week. Again, the number 18778-SILVER, the website guildhallwealth.com. This has been The Real Money Show on 640 Toronto.